Okay, recap for Monday the 13th of October 2025. Um, Today was one day after the big dump on Friday. Yeah, let me show you on the daily chart, as you can see. This big dump, and this big dump was 1,000 and basically 1,200 candles. That's insane. Ticks, candles, whatever the name of it, right? That's insane. So, of course, Monday, especially seeing this massive new weekly opening gap, I didn't feel inclined to trade it. And it was surprisingly cleaner than I thought, right? And yes, it was tradable. And did I care? No, I seen it do exactly what I wanted to do actually. But, you know, why would I put myself in low probable situations? And that's what I learned. So I just sat and watched it and I was like, okay, it delivered. Do I care that I wasn't in it? No, I'm not chasing it. I don't care. This is the best thing that is there's a good thing about my mindset, or like what I changed about my mindset. Right? I can't be just chasing price. I need to like trade what I like. And if I don't like it, I don't like it. However, the day was actually much cleaner than I would have expected it to be, especially after this big dump, right? So now let's explain how you understand this thing, right? So after this big dump, right, we have took all this external range liquidity, right? On the weekly, we have entered into this weekly fair value gap, the only weekly fair value gap that we have entered since we left this one open here, right? Look at this. You see what I'm saying? So we're going to this weekly fair value gap, and I believe we go to the lower quadrant of it. Okay, perfect. So that says, I mean, if we end up taking this high, that's just insane manipulation work. However, it says we're bullish, but we're not that bullish. Okay, lower quadrant is bullish, but it's not that bullish. Do you understand what I'm saying? If it's CE, then yeah, okay, this is just a retracement. I'm expecting us to go higher, but I'm just cautious of longs. So now I'm looking for internal range liquidity, right? And of course, on any higher time frame like this is an insane fair value gap that's long. However, if we just filter down from the hourly time frame, right? I don't expect us go into this new weekly opening gap. I expect it to be later on, right? Because we just need to retrace on whoever shorted first, and then entice people that, oh, we made the bottom and then go against it. So yes, I'm still bearish for this week, right? I do not expect this to be left open at all. um we can go higher. However, I want us to go lower first this week, and that's what I'll be looking for. um so now gap, right? We can see this big obvious gap. Now filter down to the 15-minute. Okay, we can see this gap, right? It's included. However, I can see that we've used this bottom bit, so technically I'm looking at only this range, but I'm looking for something specific, right? So the only max one that I'm dropping now is the 5-minute. I can see that this fills this little one, and on the 5-minute we have this gap with this prominent order block, right? If we want to go lower, right, this is where we should be retracing from, this gap. As you can see, we're generating buy side liquidity next to it, which is expected for us tomorrow to go up into it and then dump, right? Dump to where I'm expecting these sell side liquidities, right? So at least that we could go much lower, but this is at least what I'm expecting. Mind you, the ranges are very large now because of this range, so lower the contract sizes. So what did that? My initial bias for today is going up to where, see if we can get close to this. It doesn't have to hit it, but just draw up to there. Okay. So I wake up and I see that we take Asia sell side and London sell side, and we make a London high. So my target is London high, just for the day, right? Just for New York London high. Why? If we drop down to the 1-minute time frame for actual detail, what jumps out of the chart? like at 9, right? This one jumps to the chart, and like I looked at it. We're here at 9. What jumps to the chart? Okay. Okay, yes, we have taken liquidity. However, we made relative equal lows as the initial liquidity, right? So that's the initial buy side, I mean sell side, which is the liquidity at 7 a.m. right? Between 7 to whatever, 9:30. So that is my initial sell side and it's relative equal lows, right? So I'm looking at it as well as the buy side. What's the buy side? Right here, this is the highest high at 703. So I'm expecting that to be taken as well, right? I'm expecting us to go for one of them and then go for the other. Okay, so now we have this buy side. Okay, initial buy side, initial sell side, but we are bullish overall because higher time frame we're taking this sell side. However, what's the smoothest area right now? It's kind of jagged. What's the smoothest area? Look at these highs, kind of close to this as well, but look at these highs. Perfect. Now we have kind of like a secondary London high. It's relatively equal highs. Boom. Buy side. Okay, so now let's see what the market has done. Now I jump at 9. I can see that we just go zoom up. Mind you, there's no news right today, so no news. We zoom up and we take the buy side liquidity in a wick, right? We don't even close above it. Then we go down. What does that show me? We literally went to seek liquidity. Now I need to see how we trade below this level, right? And this level has to be important. It can't just be any level. So now I need my higher time frame analysis, right? We're looking at the daily chart. Where's the daily chart? Okay. Currently, I can't say where are we because the daily chart is absolutely destroyed. From this, I need us to fix this up. So again, 4 hour, right? And 4 hour, I'm looking for discount, right? I'm not gonna look at this as a discount, right? So let's have a look at the 15-minute time frame. This range does not exist yet, right? This range does not exist yet because we closed here, we opened here. Don't care about this for being a discount, right? We're not discounted here. This is our discount, yes. However, for this price run, where's our discount? Well, we'll take it from the opening price that we just opened and went, and then where? This low, these lows, you see? So these lows are a discount, right? So remember this, 24744 is my discount. So I'm just gonna put this as a discount so we know where to look for PD arrays. Okay, now main time to look for PD arrays is 4 hour, right? For continuation on the high for being bullish. Okay, what can we see? 4 hour CB, simple. You can't get simpler than that. And technically balanced kind of price range, but don't really look at it like that. So I'm gonna get my quadrants, right? And I can see the 0.5 is just under it, under the discount. So I'm gonna get the 0.5 and I'm gonna get the 2.5. Okay, perfect. Now we can go ahead and go to the 1 minute. Now we can hunt for the setup. So what's my setup for continuation? Very easy, right? We know our liquidity is up. Okay, so what does price tell me? Discount. Okay, this green line. This should not be green, it should be blue. Discount, liquidity, then PD array, right? So then you enter. So you enter and stop loss at the low. Entry, stop loss at the low. I'm waiting for that first reaction. As you can see, where's the target? London high. Or this high at minimum, right? Let's just say this high to be safe for the day. Okay? That is not bad risk for this trade. However, it does go up and come close, right? That's not bad, but it's making relative equal lows. But as you can also see that we go up, we'll come back all the way down to discount again, and then go up again, right? All the way to discount. Look at it. Come down, meander around, and this would be like probably near the upper quadrant for this gap. You see? So we come back and we make an intermediate term low. Short term low, lower low, higher low, right? Higher low, lower low. In the middle. That's an intermediate term low. So for now, I would not expect price to take it. For now, see what I'm saying? And then we're gonna have to make a substantial market structure for tomorrow. So I wouldn't expect London to come take it. I wouldn't even expect New York AM. However, New York PM after, what do we have? Fed chair Powell speaking at 12. So after that, I expect the New York session, the PM session, to start heading to these lows. If not, then maybe Wednesday, right? We could go even explore higher, right? However, we're gonna come back. Do not worry, we will come back. Anyway, now looking at it, now I'm analyzing how I actually trade for this specific type of day, I can see that there was therefore a trade to trade, if that makes any sense. And on top of that, yes, this was early. I don't know if I would have entered it actually because how early it was. However, maybe if I waited till here 9:40 and I seen this try fail, right? This try fail. I just want to check if we have addition confluences as in the essence of SMT or something like that. Yes, we do make the relative equal lows. However, 9:40, again, we keep rating it, right? Where ES comes and takes or makes the exact same low here, right there. That's why we didn't go higher from here. However, it's still valid to get to that TP, okay? This higher retracement is probably like the about iffy about this day. However, it's actually more or less clean to trade, which is weird to say. And for sure, if I'm just trying to go for a quick scalp, could have entered here. If I felt this was too early, then I could have entered here on the confirmation. This fair value gap, for example, like this would be a safe entry. Why? Because then I can see this 2-3 minute fair value gap, right? I'd say 3 minute to just be safe. And as we can see, once we go above it and close, I want this to be an inverse fair value gap, and I'm looking for the CE, right? And then under it, I have this order block, right? Which has a wick. As you can see, we hit the wick CE right there. So I would put my stop loss, safe bet, really and truly, right below this or below discount, or even get it this low. However, my entry would be here. And as you notice, it'll be such a large range. Okay, that is a large stop loss. I know it is. However, it could come all the way there. That doesn't mean, oh, let me just double check on them 1 minute if I can filter it down. Right, that is an extreme stop loss. I'm not gonna lie. I think I would not want to push it up below this fair value gap, right, in the 1 minute as well. To like, if it's a full inverse fair value gap all the way down, I would not want price to come all the way that low. So in essence, that's risking 400 if we just doing 5 contracts, and my TP is at least this high, right? So that's kind of an iffy 1 to 2-ish trade. Do you see what I'm saying? However, me personally, I would never enter that later, right? I'd be entering of this reaction of us going up, right? Because I'm looking at the 15 seconds. 15 seconds gonna give me like real real good entries, right? So what would I do? Me personally, I know is once we go low and we don't actually take it, and then we go inverse this fair value gap, close above it. This like anything that's coming down here, I'm buying it. So like let's say I get a fill over here, and then my stop loss would go right there. And as you can see, then the risk goes back to what? Around 170, which is much better with the same TP. That is much more now. So I'd say 1.250, right? And I'm only looking for 750, so I'm looking for this much range. There we go. So yeah, it would have been a solid trade if I was bothered to trade it. However, I think I just looked at the market for 2 seconds and I was like, hey, it's not worth it. After all of this shenanigans, right? I need to see what they do on Monday. And now I expect some, because it was kind of cleanerish, cleaner than I expected. I would expect some shenanigans on Tuesday morning, right? Let me just pull one thing up just to make sure, because Fed Chair Powell speaking is a bit of weird news when it's like a bit later, and I'm pretty sure that means trade PM. So let me just get that information. There we go. Okay, that is weird of me. I have not logged the last one saying that it's Powell speaking. However, I'm gonna go correct that in my data, but I remember that it was a PM, right? Go trade the PM when Powell's speaking at 12:20, because if I remember correctly, the day started going down. However, it was very sluggish and slow until just one point it said, okay, it's time to actually drop down. And I'm trying to just look at the market really and trying to remember this day that was very, very slow. Like everybody knew it was going down. Everybody knew it was a short. However, it was just taking way too long for it to drop, right? And then it's eventually at the PM session, it dropped. I think it's Tuesday, 23rd of September. You see, if I can get this correct, this was Monday going up and expected these sell sides, like at least, right, to come to. However, on the 1 minute, look at this, right? All this stolen. And if this is 12:20 or whatever, then we're having some movement. And there we go. We give up the ghost at essentially the PM session. The most obvious fair value gap entry right here. The second the PM starts and we hit that quick dump, right? I think that should be it for the day. You know, basically is it. And just to confirm the date, you know, let's hope that I'm right. I'm not just yapping about like 23rd of September. There we go. Fed Chair Powell speaking at 12:35. See, I remember my days. Anyway, that's it. That's the market recap. And if that's the case, actually, and if I'm bearish and I can see an early entry, I could just do a quick entry middle of New York somewhere and expect this type of thing and PMB continuation. So we'll see. Anyway, that's the market recap. Peace out.